Good Tuesday morning. It's February 16th, 2021. I'm Guy McPherson of Nature Bats Last, which you can find at guymcpherson.com. I'm going to provide a few headlines this morning and then an indication of where the stock market is opening for the week. Stock markets were closed yesterday in the United States for President's Day. So here we are with headlines that go all the way back to Friday after the close. From the Economic Times, Fed eyes trouble in commercial real estate, corporate debt in 2021 stress tests. And specifically, according to the synopsis, the scenarios also envision a global recession where U.S. unemployment jumps to 10.75%, which we passed the United States decades ago. Economic growth falls by 4%, which we passed in 2008, 2009, if not before then. And the stock market sheds 55% of its value. Does the stock market shedding 55% of its value mean that industrial activity goes down by 55%? Therefore, the aerosol masking effect comes seriously into play with a significant global average rise in temperature? That's the question that I've been trying to answer with all of these videos over the last several months. We'll see. From CNBC, doctors warn that COVID will become endemic and people need to learn to live with it. Sounds like something my parents used to say. You're just going to have to learn to live with it. It was usually something bad I'd done in that case too. From CNBC, bidding wars are off the charts as home listings fall to a record low. So that's one of the outcomes of this particular pandemic is in the United States, people are looking for houses that are a little bit off the grid, a little bit out of the standard path. From Market Watch, Saturday morning, the sputtering economy will get better thanks to trillions in new Washington stimulus. So that's the approach, is to pump more money into the system. Market Watch reports, same day, despite surging stocks and home prices, U.S. inflation won't be a problem for some time. That's right, because we're in the midst of a profound deflationary spiral, as bad or worse than the Great Depression of the 1930s. So you can pump all the money you want into the system and it's just going to get soaked up by the system as people start spending that money and getting the gears lubed again for economic growth. But we're not even close to that point yet. From Bloomberg, and this is hilarious, in the United States we always turn to our economists, right? They know better than us. That's why William Nordhaus was the one who was turned to for his 2°C temperature rise, global average temperature rise, as being some sort of target. Even though the Advisory Group on Greenhouse Gases pointed out in October of 1990 that 1°C was the absolute upper limit, and David Spratt, climate science speaker and writer, said that we started triggering self-reinforcing feedback loops at a 0.5 degree, which is a long time ago. Still, we continue to turn to economists. This headline from Bloomberg, top economists warn U.S. against underestimating climate damage, which is exactly what top economists have been doing for generations in this country and beyond. Wow. From the Motley Fool, 4 reasons the stock market could crash very soon. I could think of more than 4, but nitpicking. Final headline from yesterday, the New York Stock Exchange president says the stock market is not a casino. Here's what the academic research says. And as you might expect, the academic research says quite the opposite, that at least in some cases, the stock market is a casino. Sorry, that was not the final headline for the day. We got a couple more. From Barron's, this is where the real stock market bubble is. I really don't like the grammar of that sentence. And from the story, from the lead, it is likely that the S&P 500 Technology, Hardware, Storage, and Peripherals Index is in a bubble at risk of bursting. I don't think it's the only one, but what do I know? From NPR, millions are out of a job, yet some employers wonder, why can't I find workers? Well, the answer for that headline from yesterday comes today from the Wall Street Journal. Ban on new foreign workers left U.S. jobs unfulfilled even in COVID downturn. And it wasn't just foreign workers. that couldn't get a job. It's a whole bunch of people that couldn't get a job because they weren't willing to take wages at minimum wage or less for jobs that have people exposed to the virus on an hourly basis. So maybe that has something to do with it. Maybe the rich just aren't rich enough to fork over some money to pay people a decent wage for working dangerous jobs. That might be it. And of course, that goes right back to them. Where do they think they get their money from? It's from those other people. So maybe it's time to let go of some of those dollars so that it lubricates the system a little bit better. Okay, also from today, at least 4 dead, 150 million people under winter advisories as unprecedented storm stretches across 25 states, 4.3 million without power in Texas. And this is the polar vortex, the meandering jet stream. It goes by a variety of names. And I was asked just this morning at the troll farm known as YouTube, how we could be experiencing increased global temperatures if we have storms like this, which is like saying winter is an ice age, and it happens every year. So it's called climate change because it has varying outcomes, including extreme cold during certain times of the year during some parts of the world. And finally, from CNBC, Bitcoin surpasses $50,000 for first time ever as major companies jump into crypto. Well, I might be inclined to say too little too late for those major companies, but again, we'll see. Finally, headline indicates where the markets are headed after last week. Last week, all 3 major indices in the United States finished at record highs. This headline from Fox Business this morning, stocks on track for records as frigid Texas weather shuts oil, gas facilities. It used to be, not that long ago, that threatening oil and gas facilities would cause the stock market to plummet because that event would cause an increase in the price of oil and people couldn't afford it. Now, however, that we're in the midst of a deflationary spiral, anything that drives the price up for oil puts money in the quote right place and further greases the wheels of industry. So here we are. Markets are 5 minutes into the open with a 30-minute lag between when the numbers are out and when I get the numbers, and the Dow Jones is leading the way up more than 100 with the NASDAQ up more than 50 and the S&P 500 following suit. So record-setting highs last week leading to record open again this week. And I turn once again to my contemporary and my colleague to find out his thoughts on these bad stories that seem to point to me towards reduced industrial activity. And I'm sure they have something to say about it. Exactly what I suspected. At least he's reliable.